All right, good morning, guys. Let's get into the stock market technical analysis. I'm going to go through the charts and what I'm seeing so far this morning. Now, we just had the CPI reading come out a little lighter than expected. At the end of the day, it's kind of a game, because you're going against what's expected, and the expectations change. So it's really a moving target. And that's why the technicals oftentimes will give us an idea of where the markets are going to go, because the expectations move around to fit the narrative of where the technicals actually are going typically. So if the technicals say that something, a chart's going to go up, then the expectations usually shift prior to that to meet those technicals. Now, given all that, I want to talk about the next trade, really my next trade idea. And who knows if it'll be right or wrong, but I'm going to point out what I'm seeing in the chart. So if you're finding value in the content, drop me a thumbs up. Check out the Stock Market Technical Analysis course, link in the description below. And join up on the private member group if you're interested in getting kind of early morning insights and additional trade ideas. Link in the description for all those. So you have to click the little description of this video, and then you should see the links. All right, so triple Qs. Here's what I've got. All right, the downtrend line on the daily chart started back here. We've got a downtrend line. I'm going to try to keep this relatively just to the point. All right, I've got kind of two trend lines, but here's the secondary one right here, and we're marching up towards it. The 200-day moving average is right up there, and that is the downtrend line of this bear market. So technically, nothing's changed as of this morning in terms of, the trend. There's no change in the major trend, which is down, and we're just rallying into that trend line resistance. Okay, so trend line resistance right now is sitting at about 301.09. We haven't hit it there in the regular session, but if I zoom down to the pre-market, you'll see basically you can see right here, pre-market, we basically ran up and hit it at about 389. So didn't quite get a tag of it, but right in there as kind of that major resistance area. So that would be an objective area to short at. It doesn't mean it's going to work out, but definitely objective. And going back to the daily, you'll see that basically that is pretty much right there. So we hit that trend line, that downtrend line in the pre-market. We have not. We were essentially rejected at it so far. So what I'm looking to do is start scaling into short positions on, basically I took some at the open, and I'll add to that position on rallies up to that resistance line. If we break out above it, I'm likely not going to be adding. I'll probably just sit tight, and we'll look for area. We'll make sure that charts are shaping up. And then if we start to break higher and things start to take off, we'll look for areas to exit the short. But as of right now, I like scaling into this. The one thing that we do need to keep in mind, we have the Fed coming out tomorrow. So that's obviously going to move markets. So any position that I'm taking right now is not going to be a full-size position. I just won't take a full-size position ahead of the Fed. I will scale into a short, and I'll add to it after the Fed. Okay? So likely what I'm expecting is, depending on what we do, if we close the day up and around this 300, or, I would expect that after the Fed, we maybe rally up to that, or we get rejected, but we're not really going to go beyond that. So I think maybe it could rally and then reject, or we could just be up here at the moment when the Fed starts to come out and then reject there. It is telling me that we're likely going to reject, although, no position should be too heavy in case it goes the other way. Okay, let's flip over to the futures, NASDAQ futures, and I want to show you kind of the same look. Here it is on the daily chart, NQ. There's your downtrend line, so this is your bear market. Rallies into resistance, should be shorted in a bear market, and there you are right there, rallying into resistance. So we could grind around here, could probably even pop up, hit the 200, but whatever happens in this area, I would expect it to get faded and rejected. So maybe it pops up and hits the 200 after the Fed and then rejects. That's completely possible. We're in a zone of resistance regardless of, minor kind of movements around this area. So for a swing trade, as a swing trader, we want to get positioned in key areas of resistance, and then just let the position kind of work out. So the intraday stuff that happens today, I'm not too worried about. After the Fed, I'm not too worried about. And then we'll kind of take a look at it after the Fed and see where the dust settles. But definitely a key area of resistance, which tells me that we are likely going to get rejected and head lower for the next leg lower in an ongoing bear market. Nothing tells me that this bear market is over, and we are at major resistance. So that's the best we can do. Looking at the hourly here on NQ, no real divergences as of right now. You can see here we're kind of popping up, making a new high, so no real negative divergences. What is that? We don't have to have negative divergence to get rejected. It just is often a leading indicator, and we're at resistance. So maybe it wants to reject soon. Maybe it wants to grind around for a little bit, maybe even for the rest of the week, and put in that negative divergence. That's all possibilities. The S&P 500, here's the SPY. So you can see here on the daily chart, downtrend line. I've got it kind of marked out everywhere. There's another rally into resistance. And sure enough, we're just slightly above it. But basically, this is a gap up into resistance. And that is it on that one. It's objective to short here at this resistance level. No guarantees it works out, of course. And here's ES, the S&P 500 futures on the daily chart. You can see downtrend line, clear downtrend line here. There's a reaction today. They're popping it above it, but this is intraday. We're looking at a daily chart. I suspect it closes at or near resistance without a breakout. And if it does break out, again, that's a breakout right ahead of the Fed. So that's not something you typically want to take, a breakout ahead of the Fed. So likely would be a fake out if it does actually show a breakout today. Let's look at the dollar and gold. So here's the dollar futures DX. You can see we're coming down to a level of support here. So you've got this level. It's right about 103.57 or so, and we're dipping down to it. That is support. It is a divergent low as well, just barely. If I go to the hourly, let's see here. You can see it. Actually, I take that back. Not really a divergent low on the RSI. It is there on the PPO as a divergent low. You can see it right here. If I just grab the line tool and extend it out. Okay, divergent low on the PPO, and it's a level of support. So I suspect this is probably where the dollar is going to stop falling. And then if I flip over to gold, now gold is looking pretty strong. Again, here's the daily chart starting to break out. Again, the one caveat that we have to take is that this is ahead of the Fed. Now, I've been talking about gold being a good buy the dip sector, and I have been doing that. But that doesn't mean I want to be rushing in and buying it today, on big moves up right ahead of the Fed. That's pretty high risk. So this is starting to break out above this most recent level of resistance, which is pretty decent resistance, 1807. You can see here that was a clean level of support. Then it was resistance, another reaction, lots of reactions there. So we are breaking out. It's just right ahead of the Fed. And the Fed is going to move markets. They are, everything is in play when it comes to the Fed in terms of interest rates, the dollar, gold, and, growth stocks especially. So again, I don't, this will probably get faded today, I would think, and will probably not break out right ahead of the Fed. And that's really all I have. Everything else, obviously, given the CPI and then the Fed tomorrow, is, we got to give things a little bit of wiggle room. But I don't see any technical, changes. And it does look like objective areas to start to add shorts, build swing short positions, in my opinion, for that next leg down in the bear market. Again, I don't want to be shorting. If I go back to triple Qs, a lot of the retail traders and commenters on my channel, they will, they're extremely bullish and foaming at the mouth bullish on up days. And they only get bearish when we start to move down. You go back and look at my trading strategy, I typically start to get bearish, as we rally into resistance. And then I start closing out my shorts as we start to fall. So this is objective area to short at. And, we'll be looking to be taking our profit as we start to make new lows in the near future, weeks, months. We don't know exactly when that's going to be, but that's what I've got right now. That's the best I can do. We have to wait till the Fed's cleared out of the way before we can get a better read on the market. And because of that, I'm not going to go too heavy into any single positions, but I am going to start taking swing short positions, start to build those back again starting today. So best of luck, guys. Drop me a thumbs up on your way out. Check out the course. Join the private member group if interested. I'll catch you on the next.